welcome to Profiletraders. This is Reza and you're listening to my market analysis for Thursday the 11th. I am not going to explain the market through the profile chart because I cannot fit it all into my screen, as crazy as it is. So we're going to look at the daily to see a little bit what's happening. So last we spoke, we were giving you this trend line, and I said once this trend line is broken down, we are going to be again in a directional move down, which if we copycat the length of this drop from this level here and projected to the downside, more or less we were going to land around 1665, 1670. However, prior to do so, we have to deal with several very important bottoms. One bottom has been this very famous 1820 level, and the last time we did drop below 1820 in this session, we got a strong response back up, which ended up with a bit of a rally to the upside. But as we were rallying or trying to rally to the upside, I indicated that the action on the way up was very hesitant, and this was all indicating that we were going to see further push to the downside. So now we are at a very, very important critical junction here, and that is if this is going to be considered as a double bottom, and for whatever reason they saved the break below 1800 for a second time here, we could now see a potential of a push back up for a retracement of the leg coming down from 1940 to this low of roughly 1800. Any given time that we do break below 1800, we're going to be dealing with a level below at 1779, and if 1779 doesn't hold, I'm very confident that we are going to drop to 1700. Now, what is causing all this? There are several factors. Factor number one is a complete total loss of confidence towards the Federal Reserve, which is managed much worse than any traveling Romanian gypsy circus, because they heard not even 30 days ago or 40 days ago in the month of December, a Federal Reserve that was so confident that the economy is so wonderful that they had to come and hike the rates to cool it off. Only yesterday and today they hear this Madam Chairman of the board completely retracting her story and even talking about the possibility of rate cuts and negative rates if necessary moving forward. So people sit and ask themselves, if this silly institution with this bunch of overpaid clowns, with all these multi-billion dollars under their hand in paying mathematicians, magicians, economists, econometric models costing hundreds of millions, if these clowns cannot predict 30 days of economic activity between their last read of the economy and the current condition, how on earth can they predict anything going forward in the next 6 months, 1 year, etc., etc. And people have lost complete confidence towards the Fed. So now it's wild, wild west. The Fed is no longer to be able to feed the market, even though that they're trying very, very hard. I will explain to you, for example, what they did today. But overall, they think that if we collapse and if we drop this time, it is going to be a much tougher situation than 2008 and 2007, because there is no more bullet left in the arsenal of the Fed to deal with the disaster. In the very big picture, you must be very much so concerned now with a very, very well established trend line down. We could see bounces, we could see manipulation, you can see all sorts of things taking place, but until this trend line down is not broken to the upside, and it needs to be broken decisively on a closing basis, this trend down should continue, because the economies around the world and the United States are not improving but rather deteriorating quite fast, and the Fed is running out of bullets, and the corporations are loaded with a maximum record amount of debt. Oil industry is burning like if it was on fire. There will be massive ramification of bad loans, companies going bankrupt, a lot of money that the banks should be eating based on the carnage in the oil industry. And this is all reflected into the bank stocks. As you heard, Deutsche Bank is even at a lower price than it was in 2007 and 8. And even the nest of all snakes, Goldman Sachs, is at $140 from a high of $200 something. So things are pretty bad. And until this trend line is not violated to the upside, I don't care how much they manipulated in the very short term, we should continue the drop. So be very careful now with 1800, after that 1780, and if that 1780 doesn't hold, I can definitely see a one-shot drop towards 1700. Now, today, as we did approach the overnight low, they came in with fierceful bounce. Now, obviously, you don't have to be a rocket scientist to understand that towards the day, end of the day, almost every time when the market starts to get into murky territory, in this condition 1800, the Federal Reserve comes in, spend your money and my money, or even not my money or your money, but money that they would print out of the hot air coming from Miss Yellen, and they buy the market, bringing it as high as they can, so that when tonight we crash, we will crash from a higher level, and then tomorrow doesn't look as ugly as if we would close at the very low and then crash. So these short-term manipulations are not going to succeed. They're silly game played, but they play it. Neither you can stop it nor I can. So let's look at a little bit the support resistance levels here. Obviously the very large support, very important support now, becomes 1800 to 1805 to give you a wider range. This is the line drawn in the sign that we should not break. We do break that, 1775 next. On the upside, there is a POC at 1837.5. After that 1843, and if we can trade above 1843, I'm very confident that they're going to take it up towards 1860. Once it does reach 1860, 1870, we have to look at it to see if that's going to match the trend line touch that I showed to you on a daily. And of course, prior to 1805, you be concerned with a little bit of a support right around 1815. So 1815 is support 1, 1805 support 2, 1800 support 3. As to the upside, resistance 1, 1837.5, resistance 2, 1843, resistance 3, 1862. And which way will it go or not? It's very, very tough. This is an extraordinary, brutal, and extremely high volatile market. For crude, the carnage continues, and there is no end towards this. Every single day is a crush. Every single day is a massacre to the downside, and it looks worse and worse as the day goes. But at least in the very short term, the fact that we did hold above 26 is a very slight positive. Very slight. But again, we could come down, break that level, no problem. It's still in a very nasty downtrend, and there has not been yet any sign of a significant buying coming into the market in order to be able to call this a bottom. However, it is so grossly oversold that any outside news, outside event could definitely create a very strong short covering in the market. In order to see a reversal taking place, we have to clear 27.5 to the upside. So the main bottom is 26 now. As long as 26 hold, we should come up, break 27.5. Past that, we have a POC at 27.80. And if we can break above 27.80, we're going to have another resistance coming in at 28.22. And if 28.22 is broken to the upside, this whole selling tail should be attacked, and I can definitely see a push up towards 28.75, and at that point I'm sure I'll be able to reevaluate the market with another market recap for you. So tomorrow will be another interesting day, end of the week, end of the end of the week and the beginning of a longer 3 days weekend, and I am sure that volatility in all market will continue to be in place. Therefore, be very, very careful, because this market can definitely blow your hairpiece away by the wind that it creates. Thank you for listening. This was Reza with Profiletraders. If you wish to learn market profile, get an honest, competent service teaching you how to trade it, check my website. I'm offering you a package with 5 courses, 1 year trading room membership for $550, 30 days money back guaranteed, but this deal will end today or tomorrow. Take advantage of it. I assure you it's worth it. Have a wonderful evening. Talk to you next time.